Hello everyone, in this video I will teach you an easy ICT bread and butter trading strategy that you can use right now and become profitable. So let's get on with the video. So the very first rule of the strategy is that you have to identify the order flow. This has to be one of the important things when it comes to trading this strategy. Once you identify the order flow, you should be good to go. So what is an order flow? Basically, if the price is continuously respecting the bullish or bearish PD arrays. So for example, if the order flow is bullish, it has to be respecting every single order block and fair value gap in the discount. So there's an order block. Price is going up, right? You see that price is going up. It is also respecting the order blocks, right? Also the fair value gaps in the discount zone, and it is going up. That is literally your order flow. Once you have identified the order flow. So let's say that we know that the order flow is currently bullish. We want to mark out the PD arrays. So we want to mark out bullish order blocks near our price action. So now we know that the order flow is bullish. There's going to be an order block here. For example, here let's say there's an order block here. You want to wait for price to come back into that order block, and then you have to look for trades. So the rule number 2 is that you mark out the PD arrays. Now there could be a fair value gap here as well, but I suggest that you stick with the order block. Now, the time frames that we're going to trade is daily time frame and 1 hour time frame for this strategy. If you want to see an insane consistency in your trading and you're going to see your windward go crazily, higher than So you want to stick with these time frames, the daily time frame and the 1 hour time frame. So we are going to look at the order flow on the daily time frame. We are going to mark out the PD arrays, which are your order blocks and fair value gaps in the discount. I suggest do it with the order blocks. And then once the price comes back into that daily order block, you want to drop down to the 1 hour time frame. So that's when we look for a confirmation entry. So now let's say that the price comes into your order block, the daily order block, right? You want to drop down to the 1 hour time frame. Now price creates a lower low, lower high, lower low. And right here, once we get a market structure shift, you want to take your entry from the 1 hour order block. That could be somewhere around here. You could go for 1 to 2 or 1 to 3. Simple as that. Guys, this is a mechanical trading strategy. You don't have to, confuse yourself with all the other concepts that are out there. Turtle soup or whatnot, guys like fair value gap and all. Just do this. This is like you are trading with the trend number 1. You're trading inside the discount zones. That is number 2. Then you're looking for a confirmation entry that is literally a complete, a trading model. And you will know that when I'll give you guys examples. But this works absolutely well. I cannot tell you how it has changed my, I would usually before the strategy, I would take 3 to 4 trades per day, right? But then when I switched, currently I am trading this strategy. I have a lot of strategies that I've uploaded on YouTube. But this one is good for my psychology. Because I only have to look at the charts for a very small time. And I also take 2 to 3 trades per week, or usually 2 or 3 trades. That's the high quality trades. And in a month I would literally go for 5 to 6 trades or 7, you could say. And they are extremely profitable. High consistency. So let me give you a summary. We look at the order flow. If the order flow is bullish, we mark out every single order block near the price section of the daily time frame. The confirmation part is when we wait for price to come back into our order blocks. And then we wait for a confirmation entry and boom, we take our entry and that's it. So let me give you guys a couple of examples and then I will end the video. Alright, guys, so here is example number 1. If you look at these arrows, they are basically fractals. It tells you the correct lows and highs. So if you want to add this to your charts, which is it's actually a game changer. You go to indicators, type in fractals and you choose the one by Rachel T. And the settings are here for my chart, for my indicator. Alright, so what do you see? The order flow is bearish. You can see we respected this fair value gap, right? We respected this fair value gap. We took out buy side here. So we are now going down. We are also respecting this order block. Be pushing down, right? When you look at the chart and let's say you are like, okay, I don't know if the market is going up or going down. What should I do? You just stay away from that payroll asset. But if you see a pure asset that is clearly going in one direction, you will automatically know that, okay, it is going down. So for example, if I look at this, you can see that we have been going down, right? You don't have to go way back in time. Just open your chart, go to the daily time frame and see where are we going. So in this example, you can see we are going down. That is your bearish order flow. So we are only going to trade with the trend. And that is the key here. So right here, what do you see? We have this beefy order block, the daily auto block here. So what I do is I mark out my order block here, right? The body, remember, we do not mark out the wicks, we mark out the body of the candle, because that is the real order block. So price goes back into the order block here. So now what we want to do is we want to drop down to the hourly time frame. And what do we see? We have a higher high, higher low, higher high, higher low, and a higher high. So now this is the real low. Once this breaks, that gives me a market structure shift. Once you have the market structure shift, you gotta take your entry from the order block. So you see these consecutive bullish candles right here. That is basically your order block. So the body of the candle, remember that, okay, so I will simply go short just here, right? I put my stop right above the high, and I simply go for 1 to 2. One thing that you can add is look to your left. Is there a liquidity buildup, a trend line liquidity, right? What is this type of liquidity? Is basically the order flow, a small order flow, right? So you can see this order block respected, this order block was respected. Basically it is building the liquidity. Alright? Once you see that, once the price was coming into your order block, it builds up liquidity. It builds up like a fake bullish order flow into your bearish order block. So what it will do, it will respect this order block right here. You can see respected. This order block here. Then we have this fair value gap. It respects this, now this is all liquidity, okay? So we simply go for 1 to 2. And let's see how this plays out. You do not go break even. You do not move your stop loss. You just let the trade play out. And you can see we hit 1 to 2. It took some days, not days, it only took like 1 day max for your take profit to be hit. Now this is the beauty of the strategy. You took your trade, you just disappear from the charts. You don't even look back. You have your take profit set, you have your stop loss set. You are not going break even. You're not moving your stop loss. You're just letting the probabilities play out. The probabilities are always going to be on our side. Number 1, why? Because we are trading with the order flow. Number 2, we are also trading once we had the confirmation entry on the higher time frame. So daily and 1 hour is a higher time frame. Institutions and market makers, they only trade these 3 time frames weekly, monthly and daily. Okay, we use the hourly because time is fractal, right? But the big boys are always looking at the higher time frames, order blocks. Okay, could be a daily order block, could be a weekly order block, could be a weekly fair value gap or daily fair value gap. That is what ICT says. And I just teach what he teaches and they work absolutely well. And whatever he says, he is absolutely right. Very simple, guys. I really hope you guys enjoyed today's video. It was very simple and concise. If you get to learn something new on our channel, then do subscribe to our YouTube channel. I'll see you guys. Goodbye. Thanks for watching our video.